Good morning and welcome to the Option Pit Volatility Report. I'm Mark Sebastian. I am the founder of OptionPit.com. Welcome aboard, everybody. Reminder, this is for educational purposes, and anything you hear is for educational purposes only. If I say something and then you do it, it is your own dumb fault if you lose money. All right. I want to thank everybody that made our Black Friday sale such a huge success. It was the Option Pit store's grand opening was a huge success. I'm super excited about that. If you're interested in seeing Mark talk about his life and talk about the way he views things, you can go to our blog and watch me on talking to Catherine Murray on BNN. So let's talk about the markets. Well, huge rally today. Asian markets are booming higher, and you can see that they are popping the S&P right back up toward that 2100 level. It is right at that pretty important resistance point, which is that 2100 level that it's been dancing with the past couple of weeks. They are decimating volatility to some degree. It's still above 15, so it shows you that people are still worried about the Federal Reserve. We can see December volatility. The December VIX future starting to come flatten up a little bit. January and February are flat, so they're letting volatility relax here a little bit. Surprisingly so through the week. Now that doesn't mean everybody's all hunky-dory with what's going on. There's already been some bullish call trading in VIX today. If you look, there's been a pretty decent sized buyer of the VIX 23 calls. He's already bought a few of those, and there's been some other upside that's traded. So there is absolutely some risk out there of there's still perceived risk even with the S&P up. I think you're to see VIX have a hard time getting below 15 this week, primarily because of the Federal Reserve. And so as I look, I see the 16, 22 call spread is cheap. The 17, 24 call spread is cheap. There's all sorts of cheap call spreads that one can put on if one is looking to trade against a couple of different pieces of trade for a vol rally into the Fed. So it's there. I mean, we're up big and the VIX is barely off. So there's still an underlying bid for options, and traders need to be aware of that, and that is there. So other places where I see some continued volatility, I mean, Amazon and Google, the online sales thing. One name we were watching was Goldman, and that is going to be a name that we're going to be looking at during the chat room, because I'm bullish Goldman, JP Morgan, Citigroup. So I'm going to try and I'm bullish the volatility. I'm also bullish the airline stocks. I want to come up with some way of playing those in a smart manner. And finally, Facebook. Anytime that the Facebook gets toward 100, it's looking like it's getting bought. So just be aware of that cycle of the trade. And then finally, bond vol is shamefully low. 12% is too low for TLT, and that's something that I would is another thing that I'm going to take a look at today. So we've got a lot of different pieces to look at in the chat room, and I've got a lot of different pieces that I'm watching personally. You got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE01. Make sure you're coming to our blog, www.optionpit.com/blog, every day for all sorts of awesome content. Have a great day, folks.